Good morning, everyone. Welcome to Trading with Larry. Unfortunately, Larry can't be here, so you are joined by myself, Eric Shamilov, and Larry's right-hand man, Mr. Clinton Brewer. Good morning, Clint. Good morning, everyone. As the stock market is consolidating here, S&P 500 bouncing off its 5-day moving average. We talked about all these technical levels around prices yesterday before the open, and our call was the S&P would be bouncing around there, probably an iron condor kind of day, and it was. And we've had a few of those, except for Friday's rip, if you can call it a rip. I guess it was a rip off the jobs number, which I thought came in pretty weak. And you factor in some seasonality with in the education sector, and then the revisions. We've kind of been adding only about 20,000 jobs a month for the last 3 months as we head into tomorrow's CPI reading. So the market, I would say, still consolidating here. NASDAQ 10% off the lows after its correction. And this morning, the NASDAQ is tepidly, I guess, trying to take over. A few news events that I wanted to discuss. NVIDIA is tapping Wall Street for another 500 billion, and we saw Jensen on CNBC last night with some executives from the private equity sector, and he called compute the new asset class. So these guys are really good at marketing, and I think they're trying to really market this idea. They want more capital in there, more spend, more compute. It's an asset class now. Everybody needs to invest a little bit into it. Before you know it, people are going to be saying you need 2% of your portfolio into compute. We'll have compute futures, compute options. What do you think, Clint? Is this
I
the new asset class?
no, I think that's an absolutely terrible idea to look at that as an asset class. If you own
Why would you
QQ,
ever
if
think
you
that?
own
You
QQQ,
bear you?
you have 50% of your allocation in the AI trade, which I'm going to assume is going to be extremely correlated to whatever the hell compute is as an asset class. So
Exactly.
if you hold SPY, you have plenty of exposure. If you have QQQ, you have plenty of exposure. You do not need to look at compute as an asset class. You
Yeah.
already have it. That's my take on that one.
Yeah, that's all you needed to say. You already have it. And it's funny watching them on TV with the bluster. I don't know if anybody's ever watched Silicon Valley on HBO, one of my all-time favorite shows, hysterical show. But it's so real, like how these tech CEOs always come out and they're always trying to make the world a better place. And then at the end of the day, you kind of look into it and everybody has 50% of their portfolio already in compute. So Intel also
The
is
hype
trying to raise
cycle. I mean,
money.
the hype cycle, right? I mean, it reminds me of the. We just went through one of these with SpaceX, and where did that leave everybody clamoring to buy in? I mean, I remember reading the stories about people disappointed because they wanted to get allocated SpaceX shares, and they got maybe 10% of what they actually wanted, and where are they at now? I guess maybe it's recovered back toward the pre IPO price, and obviously 1 or 2 months of trading doesn't mark a trend, but like that's just if you're if there's it's being hyped up because someone on the other side is looking for liquidity is my take.
Speaking of SpaceX, some unusual options activity in SpaceX over the last few days. What do you think? I mean, I sold some of my SpaceX calls yesterday as we got back to the IPO price, 135. I was looking at SpaceX in the following way. We had earnings. All right. First of all, we were, I think, between us three, you, Larry, myself, with SpaceX at 200 and 180, I think we were all bared up on the trade. It drops. We got what we needed out of it. And then the narrative switches to, well, the next leg down is going to be the insiders dumping shares after the earnings report because now they have the green light to do so. And you kind of started to notice that it wasn't happening. And that was my trigger point to get right back into to the long side because I just saw a broken narrative amongst many in this market. But I just wonder, is that trade now over? Do you see any more upside there?
I think if you're a long term holder, I think where it fell to, you could start to start to build an allocation. I wouldn't go all in on what you intend to own, but if you want to pick up some, I think that's fine. Look, I went on the record before SpaceX ever started trading. I don't know where it's at on the channel here, but I made a video that's posted to the channel before SpaceX ever went public saying that SpaceX was probably going to have a 50% drawdown, which it just went through because that's what happens with pretty much any blockbuster IPO you want to look at over the last 5 years. That's what happens. There's a table in the video I made. Truist Research put it together. They looked at, I think it was 30 blockbuster IPOs over the last 5 to 10 years, and it showed what the average performance was over multiple forward time horizons. Ultimately looking out 12 months. But the thing that really strikes you is the the median and average drawdown are both right around 50 to 55%. Within the first 12 months of a company going public. And again, I mean, SpaceX ran up over 200 and fell to 100. So I mean, there's your cut in half drawdown. So that was probably the point that if you wanted to start dipping your toe in, you could. I just the other thing I would watch against all these names, and what I would say was really, it's pretty remarkable. I know you talk about some of these space names, and I've watched them, but I mean, these things have pulled back pretty hard. I mean, Rocket Lab, ASTS, SpaceX. Maybe we see recovery, but at the end of the day, like the financials behind these companies, once you finally start to see financial conditions tighten, all these speculative growth names are going to get hammered. So you can dance while the music's playing. The music that's playing right now is loose financial conditions, but when that turns, like, you don't want to be in anything that's speculative growth, in my opinion.
Yeah, I don't know. SpaceX to me is like pure growth. They're talking about Starlink starting to dominate cell phone services and start competing, and we're going to get a Starlink on every plane. Andrew Ross Sorkin started talking it up on CNBC last week with his amazing experience using Starlink on the plane. Larry used Starlink on the plane and thought it was great. And I was just watching. I felt like, okay, they're not selling into post earnings as everyone thought they would. And all of a sudden, you start hearing the narrative start to shift. Now everybody's getting excited about Starlink. But I don't know. The earnings report to me was pretty good given where SpaceX is and given how everyone was incredibly bearish on it. Do I think it's still going to go to 90? Yeah, at some point. But I'm kind of out of the trade already. But let's get into some charts. We'll start off with Apple. And I'm going to pull up a chart, a chart indicator that I haven't used on the podcast much, which is a very simple Bollinger Band. And I think it's a very effective tool when you're using it on a daily chart. I would never use this on an intraday chart, but on a daily chart, I think it's very effective for entry points and targets and stuff like that. So, and I'll use this Bollinger Band on a few names. We'll start with Apple. First of all, Apple was really outperforming everything, right? And gap down, big gap down, and we're right at that lower end of the Bollinger. What do you think of Apple here?
I guess I'll back up for a minute. I'm not, just for anyone not familiar with Bollinger Bands, the way this is constructed, right, is it takes basically a rolling kind of 20-day look back window of volatility,
Yep.
and plots, that purple band on top, that's one standard deviation above, and the green band below is one standard deviation below, right?
Yeah.
And so, when
Well,
you're
here, here, I think it's using two, but yeah,
is
you
that
could.
using two? Okay. Well, so then you can see the bands how they, if you want to visualize volatility, I mean, you can see it with the bands when they contract and they come together versus when they expand. So I know there's really two ways you can look at this. I mean, one, you could buy a breakout whenever you get a tight volatility expansion. Does that oftentimes will happen before a big move, so you can watch for that, or when you get the bands really wide, you could look for after a move, you could look for a mean
Like,
reverting move the other way.
yeah, yeah. Good intro on that. Very good. And here's an example of where it got really tight right before a very big move. Here it's expanding, and you want to make sure that you get your trade location right. And one observation here on Apple, and I'm going to make the same observation on another stock which I am currently in, Marathon Petroleum. But some of these names are like they tend to very seldomly break above and below these Bollinger Bands. Very seldomly. So if you have a good read, a good bias on the stock, and you wait for one of these levels to hit, whether it's the purple line if you want to get short, the green line whether you want to get long, those tend to provide excellent trade locations. So, I'm just seeing people talking about Apple on the chart. I would say I'm not in it. I don't have a bias on it, but if you do, I would say pretty decent trade location. I would say a target right in that middle area, 322, 323, and then we'll see what happens. So that's Apple. All right. Now I want to give a real life example of something that I've been in and advocating for. MPC, Marathon Petroleum. So I'm usually, I would say, over the last 3 years, long only on this name. Um, if you're talking about setting up a bias, the fundamental side of this is very strong. XLE is, if I asked you what has outperformed this year, XLK, which is the tech ETF, or XLE,
Well, I
what would
know, I know XLE. I know energy stocks are responsible for a large share of the earnings revisions on the S&P 500, and stocks follow earnings. So
there
energy's
you
got to be
go.
doing good.
XLE up over 40% on the year. So on top of that, for refiners like Marathon, you have refining margins at all time highs. As long as oil doesn't go too high or too low, if it's in a sweet spot, I would say between 70 and 90, the trend shall continue. So this thing, my first trade on this was recently. I've been buying at 260. It got to 310. I sold that Bollinger Band um, to take profit. Now I want to get back into it. And as soon as it touched this green line, which was late last week, it was a buy. And then you had an explosion up yesterday. Marathon was up 20 points. And now it's a decision point for me. Do I think it's going to rip through it, or am I taking profit today? It hasn't ripped through it in over, like, you look at this chart, this is a 1 year chart. It never rips through it. So I'm thinking so I have also oil and I have Marathon. So now I got to get rid of one of those because I don't like being overly concentrated uh, anywhere. You know what I mean?
Yeah.
So decision point. Technically, I think this is a great spot to take a profit. So this is just an example of how I use Bollinger Bands only on the daily chart. And I'll switch off to metals here. Gold. I know you guys love gold. So
Yeah.
I know how much you guys love gold. Um, we Here's the 200-day moving average, that green line right there. Um, RSI here on the bottom, if you guys can see it. We went. There was a divergence, that classic divergence where price keeps dropping, RSI starts uh, um, starts
making
finding
higher
its
lows.
footing. Yep. So you get that divergence. But now we are what? We're basically overbought on the RSI, and we're about 100 points away from the 200-day moving. What are your thoughts on this chart?
We're still bearish gold. One thing I'll get into in a minute. I've got some charts on it. Is higher yields could present an obstacle, a headwind for gold. And the other thing is, one thing we're watching for right now that we actually put a trade on in our currency wizard product yesterday, but to look for some dollar strength now.
Yeah.
And so, the combination of what yields are doing, which again, I'll get into, positioning for some dollar strength. And now you're pointing out the RSI is overbought with gold coming up to, I think you said that was the 200-day moving average. This would be, again, this is all very short term what we're talking about, but that's a good level to look for a reversal.
Yeah, so tomorrow's the CPI. You mentioned the dollar. I'll let you share some of those charts on the dollar and the yield if you'd like to. But
Yeah, I will. I want to
just so
actually.
everyone knows, I copied your euro trade yesterday
Okay.
because I am still holding gold and silver, and I have a mining position as well.
Yeah.
And
So we
SIL.
sold the euro against the dollar, or you could say we bought the dollar against the euro. I want to go back to your energy trade for just a minute because I think that for anyone looking for a longer term hold, I think there could be a good setup here. And I can't remember if it was you or Larry talking about oil prices. Like if oil prices can settle into a sweet spot for a lot of these exploration production companies, which is a boost that benefits earnings and cash flow, but not so high that you see demand destruction. That is, I don't know what that optimal ideal range is there, but I think Larry's talked about that before. But we're kind of in that spot right now where the headlines are coming fast and furious again out of the Middle East, but oil's just kind of settled into to this range. But the one area I would look to maybe play just on a broader energy theme. This is ticker IXC, which is a global energy iShares ETF. So just as the name implies, it's going to be the global exploration production names. And this was the big rally we had alongside the jump in oil prices. It's just been consolidating sideways ever since. If you maybe it's making a like an inverse head and shoulders continuation. If you looked at that as a shoulder ahead and now forming another shoulder on the right side. But I think if we, we're seeing a couple tests of the 50-day. If we start to rally, this could actually maybe be a good spot to add some exposure, and you just want to set your stop below the 50-day or that nice round, $50 level on below. But I think this is, along with some of the other names you mentioned in the energy space, I think this could be setting up to make another move higher after this period of consolidation. We're targeting for a move breakout back above 60. You can look at other stuff in the space that looks like this. If you want to be more domestic focused, you can look at XOP is another ETF that has a very similar look to this. So if I'm position trading something and looking to hold longer term, this is starting to look attractive to me. The other on the yield side, what I want to talk about is I want to go back to a chart I share frequently, which is with TLT. So TLT is going to rise. It tracks the 20-year plus bond index. It's going to rise when yields are falling, and it's going to fall when yields are rising. So if I zoom out really quick, this is a chart that I've shared frequently. This goes all the way back to 2023 and how many times this level has been tested. And now if I zoom back in, then this is the setup to trade. We had a breakdown of this trendline support level back at the end of July, which this corresponded with the breakout in the 30-year above 5%. We had a breakout in the 30-year above 5% back in, I think it was May, but it was a failed breakout. It immediately pulled back. This time it's holding, and now you're getting another bearish development on this chart, and you want to look for follow through. So a lot of times when you have these key trend lines break, or a moving average, it's common to see price come back to test that level, which is exactly what you saw about a week ago. TLT rallied, back tested that level, and now it's pulling back again. Like that was maybe an opportunity to if you want to add some shorter put exposure. But now the big level to watch is if we get follow through below this low that was made when we initially broke that pattern. And so that again, if we see follow through below that translates to higher interest rates on the long end, which I mentioned earlier was something that could be a headwind for that gold trade.
Yeah, well, unless the yield curve is rising, right? But which that's a scary chart you showed on TLT. Actually, that is a terrifying chart. You know, it looks like technically
At some
uh,
point, it'll matter. We don't know when, but at some point, it will matter.
that is a terrifying chart indeed. So I borrowed your Euro short. I don't know if you guys put it on for the Currency Wizard, but Larry
We
and I
did.
were talking about it, and so basically, yeah, I switched from being long gold versus the dollar to being long gold versus the euro here. So I do see what you guys are seeing in the euro. I don't think the rate differential move supports the euro here, and I think it's a little bit technically overbought. But the yen is like right back, right? Do you guys think we're going to get another intervention? We just had
Yeah,
one.
I know. I wish. I really. Let's see. I'm gonna pull up a chart of the end here really quick. But I really wish. I'm kicking myself for not pushing a long position back in the dollar yen, meaning positioning for dollar upside against the yen when we got down to that. It's very briefly that we touched the 155 level. So here I'll share the chart of this really quick. We did have a position on to short the dollar against the yen. I mean, one of the things that we were mindful of is how many times Japanese officials come in to intervene when the yen's gotten around this 160 level. I mean, you can see, some of these other past instances you would see more if I made this a longer term chart, but here's the most recent one. And again, in Currency Wizard, we were short the dollar against the yen. Looking for this, whether it was sometimes officials can intervene by just talking and trying to scare the markets, and sometimes they can take actual action, which they did, and the U.S. joined in, which was funny. I don't know if you saw that. Some photographers took a picture of Treasury Secretary Bessent's notepad saying to buy 5 to 10 billion of Japanese yen when he was at a cabinet meeting with Trump. But here's that extension down to 155 that's now being quickly reversed, and this is the thing, and I think history will point to this, and it's that you have infinite ammo if you want to weaken your currency. You have limited ammunition if you want to strengthen your currency. And so Japan's trying to strengthen the yen. In order to do so, they need to sell other currencies to buy the yen, which you have limited reserves again. So there's limited ammo to do this. Another thing you could do is to jack up interest rates, but you do so at the risk of hurting your economy. So I feel like,
And they've been doing a little bit of that too.
yeah, they've been doing a little bit of that, and there's still, that's the argument, is that there's still plenty of scope for them to raise rates. They're still well below where rates are in the rest of the developed world, but this gets a little tricky to play because it's going to be more volatile. You don't know when they're going to step in, but it creates a really nice backdrop to trade this. I mean, you see the levels where they want to step in, but at the end of the day, there's only so much you can do to strengthen your currency.
So us macro bros, we love this stuff, interventions and all that, right? Because it creates macro trading opportunity. But why should anyone care about this? Do you think this is going to reverberate somehow if they kind of lose control of the yen into the markets in some way?
I think it could be the initial warning shot of some more global volatility in currencies. Look, we haven't seen like really true volatility in currencies in a long time. But go back in history, and I mean, these have been some very defining events. The ending of Bretton Woods, Plaza Accord in the 1980s. You had the Asian financial crisis in I think it was 1998. So like you've had a lot of these episodes, and if the I don't know when this could happen, if it's going to happen. Everyone, is always screaming there's going to be a debt crisis. But if, where concerns over fiscal debt, government debt across the road could really erupt and spill over and cause volatility, it's going to be a combination of interest rates, but then currencies as well. And you've already seen where currencies can shake up the market because in 2024, I mean that August quick sell off in the Nasdaq, a lot of that was blamed on the yen carry trade unwinding. So there's the global financial plumbing is connected in a lot of weird ways, and it's like a spider web. And you tug on one end of the web, and the whole thing shifts. And that's what happened with the yen a couple years ago on a very small scale. If it gets out, I definitely think if it gets out of hand on a larger scale, you see that spill over into multiple markets.
All right. So thank you for that. So it's 9:10. We got 5 minutes left. Let's
How about a CPI preview for tomorrow?
yeah, let's do
After
a
you,
CPI preview. What do you think?
well, I mean, I don't know. There's nowadays
No
you're
one
always,
knows.
well, no one knows, but nowadays
It's funny. The chat always gets on us when we say things like "I think" or "maybe." But here's the thing, all right?
you have to be
Anybody in
skeptical
trading who
of
says that they
manipulated
know,
numbers now.
what was that?
You have to be skeptical of manipulated numbers now. It's like,
Well, so the chat always laughs at us that we say we think or maybe. I have the opposite view. When a trader says they know, I start thinking they're a gambler, and there's a fine line. When you say you think or you try to surmise and you piece the puzzle together and you think in terms of probabilities, you're forced to say I think, you're forced to say I don't know, because in actuality you don't know, and that's the fine line. Everybody loves conviction. Everybody loves conviction, but understanding that this is a game of probability. This is, if you're, yeah, conviction will make you money if you're right. Conviction will also blow your account out if you're wrong. So I'll leave it at that. I'll leave it at that. The trend in CPI has been down. You think that continues tomorrow?
well, it's been down for like 1 month. So yeah, if the year over year rate of change, I think is expected to come in at like 3.3%, which would be a slight tick lower from last month. That if that happens and that really starts to solidify, no rate hikes at the September meeting, and maybe it pushes out expectations for rate hike. But then big picture, you still got to take a step back. The Fed's inflation target's 2%. You've got headline inflation running at 3.3, core's running over 3. You haven't been at 2% since 2021. So everyone puts so much weight on these month to month numbers, and I think it's crazy that we put so much weight on jobs numbers and inflation data that's lagging indicators that gets massively revised anyway. But here we go. We'll see.
I'm angling toward a weakish print with the market trying to rally and then possibly fading. So I'll be looking for the fade. I am not trying to get long this week. That was for last week. And I have this chart up. I just wanted to share one other chart before I get into the intraday. And you and I were talking about this chart before. And here's the reason. This is the QQQ inflows, the ETF flows. So this red line down here, this is you had four big up days of green last week, which means they were pumping money into the queue from Tuesday to Friday, with Friday being the biggest bar of the set. Yesterday, we had a little bit of outflow coming out of the NASDAQ. I guess we all felt that in the trading. So maybe a little bit of a reset, but this to me shows me basically that everybody who wanted to buy already bought last week. And now it's like, are there any new buyers at the table? Doesn't feel like there are true buyers here. So, I'm kind of waiting for the sellers to give us the signal to fade this thing a little bit. And here's the ES chart for today. Very similar to the setup yesterday at 9:30, where we're adjacent to a bunch of technical levels that are maybe 10, 15, 20 points out. So this orange line is your half standard deviation to the upside based on yesterday's implied vol. Orange line right here, down here is to the downside, half a standard deviation. I think we'll be somewhere in this range today. Yesterday we were ping ponging. Last night we ping ponged uh, at that 5 day. This green line is your 5 day moving average. So my inclination is that the market is going to be glued to this point of control and try to retest that 5 day moving and possibly if we get below the point of control, it would be a trigger for me to start selling some call spreads if there's premium out there. But I just don't see a lot, and I think
I don't think anyone wants to stick their necks out ahead of CPI. So I think we just grind sideways again today, like yesterday.
yeah, okay, yeah, I guess I give that around a 65% probability. So I'm leaning towards that as well. Just a little concerned about the Nasdaq trying to dominate things today. That's all. But yeah, I think the technical setup underscores what you just said, and obviously we got that CPI for tomorrow. So that's it for us. You want to say anything else before we go?
Like and subscribe. We'll be back tomorrow.
Like and subscribe, folks. Thank you all for watching. We'll see you all again tomorrow.